Alrighty guys, a bunch of stuff here on Twitter I thought was very interesting. First thing is Liz Ann Saunders here. Hedge funds currently sitting on the largest net short positions in S&P 500 futures since late 2011. Now this is a fascinating chart here. Let me even make this a little bit bigger in regards to this one here, okay? And the reason I want you guys to see this as in-depth as possible is if you notice, basically every single time, at least in the past decade plus, where you've seen numbers get down this low, it has always signaled a great buying opportunity in the market. I'm not saying this is going to be the same exact, but if you think back to late 2011, oh my gosh, what a great time to be a buyer of stocks. Look at what the stock market did from 2011 through 2014. The move was, a phenomenal move in the market, an amazing move in the market. I was in the market those years. I can tell you I made a lot of money on those years. It was what a time to be alive to be in the market, okay? If we look back to right here, actually we'll go back to this one, right here, 2015. This is like middle 2015. What a great time to be buyer of stocks. Look at what the market did from about mid 2015 through the end of 2019. It was a good market. There was a lot of money to be made in a lot of stocks, man. In a lot of stocks. They give some amazing returns over that next, let's call it 4 years or so. Great time. If we look at obviously March of 2020, yes, another great time to be a buyer of stocks here. You even saw this dip here. This was late 2018. Great time to be a buyer of stocks right there, right? And we saw a number get very, very low recently. This was as of the summer of 2022. Guess what? Great time to be a buyer of the stocks in summer 2022 and into, let's call it late summer 2022. Phenomenal. And recently, we'll see if this one proves to be accurate as well, right? Who knows? Maybe we're going to go on a major bull cycle over the next 3 to 4 years here. I don't know, okay? All I'm going to say is, based upon the past decade plus, every single time period you got one of those, it was actually a great time to be a buyer of stocks. Next one up here, Brian Sullivan tweeted out this breaking. 1-year-old Whole Foods in downtown San Francisco closing. Too dangerous, they say, for employees. Interesting phenomenon. It's unfortunate you see stuff like this. I've seen a lot of this in some of these cities. I saw a lot around what's going on in Portland recently. I mean, that's a shocking. They were even closing Walmarts. I mean, like, you got to be flipping my flapjacks. That's insane, right? And this is just unfortunate to see this sort of stuff because at the end of the day, this does hold back economic output. I mean, if you're going to have to close a store like that, then that's less employees that have a job, right? That's less potential revenue for a company like Amazon, because if you don't know, Amazon owns Whole Foods nowadays. So to see stuff like that, it's disappointing. I don't know what to say. And if you start getting into political subjects and what cities are run better than others and all that stuff, and I'm not looking to go down that route. It's frustrating and disappointing to see that sort of stuff go on. But it's the time in this day and age we live in at the moment, and it just is what it is, okay? This was interesting. I saw this tweet out here, and I've seen a lot of this around commercial real estate recently in regards to some of these sales of properties at what is seen as very low prices. This was a building that was bought for $35 million in 2001, which is actually a very low amount compared to what $35 million is today. If I were to guess, like, that's 60 mil, 70 mil in today's dollars probably. Class A, downtown Louisville. Building just sold for $9 million, $24 per square foot. Real estate doesn't always appreciate. And it looks like a really nice building. And for being built over 2 decades ago, I have to say it actually looks pretty respectable and like modern and whatnot. Nice building. But it just kind of goes to show you that commercial real estate's in a tough place right now. It's in a tough place right now. And just, especially with commercial real estate, a lot of companies, some of them view going back to the office. Others have kind of considered maybe not going back to the office as much or doing part-time. And so it's not a good environment for commercial real estate, and that's where you continue to see weakness. I'm not at all interested in being a commercial real estate investor. I can tell you that. It's never been something that's been on my radar or something that's interested me at all. Fifth stock up here, Dutch Bros. This is a stock that pretty close to 52-week lows now at this point in time. Dutch Bros is a very, very, very successful coffee store chain out there, right? And they want to expand into more products over time, but they're really focused on coffee-related drinks, as well as they have like custom energy drink products and things like that that they sell at their locations. Now, when it comes to Dutch Bros, right? Incredible revenue growth for this company. $238 million of revenue for this company in 2019. 2022, this past year, $739 million of revenue. That's about a 3x in the revenue base there, right? Gross profit, meanwhile, has gone from about $96 million to about $180 million, which is about a 2x. And so that is a little troubling, I'll be honest. That's a little troubling with Dutch Bros. I don't want to see a situation where the revenues of a company is increasing much faster than it's called the gross profit. So that's something Dutch Bros has to make progress on here. But they have made some pretty impressive progress on the bottom line, right? $50 million loss down to a $19 million loss. Is 2023 a profitable year for the company? I think it's going to be close. I think it's going to be really close, right? And so this company's on the verge of getting to profitability in regards to the company in general, right? Location-wise, they have less than 800 locations on this company, right? Less than 800 locations. I mean, to put that in context, it's like nothing for somebody like a Dutch Bros. This is Starbucks, okay? Now, can Dutch Bros be as large as Starbucks? I don't think so. I don't think Dutch Bros can be as large as Starbucks, okay? But to put this in context, Starbucks has about 16,000 locations in the United States of America right now. They're likely on their way to about 20,000 locations, which is probably where they'll max out, around 20,000 locations, right? Now, this is a company that back in 2005, for instance, had about 6,000 locations, roughly somewhere in there. And so the way I think about this is it impossible for Dutch Bros to get to 4,000 to 5,000 locations over the next decade? I don't think so at all. I think they can definitely get there, right? I don't know if they can get to 20,000 locations or 16,000 locations, but can they get to 4,000 or 5,000 locations and be in a good position? I think absolutely. And I think that their stores will be very, very profitable, right? So when I look at a company like Dutch Bros, I see a crazy big long-term opportunity for this company, right? And right now, the company's trading at about a $5 billion market cap, roughly. Starbucks is about a $120 billion market cap, roughly, right? Starbucks is probably on its way long-term to being a $200 billion market cap company, right? So if you look at a Dutch at $5 billion market cap, is it impossible for Dutch to 10x that and get to about a $50 billion market cap? I don't think so at all, okay? When I see how busy Dutch Bros are versus Starbucks, and I see how those compete in different markets, because we have a Dutch Bros and Starbucks in Vegas. There's Dutch Bros and Starbucks in Arizona. And so I see like the business Dutch does versus the business Starbucks does. And I can tell you, I don't want to say necessarily Dutch Bros does more business, but gosh, it seems like Dutch Bros does more business than Starbucks does, okay? And so nonetheless, I think Dutch Bros is actually an incredible company that has such a long runway of growth. People just have to have, I think, patience with a stock like this. Patience will pay off because we got to understand the revenue growth coming for this company, the profitability that will likely come from this company, and the amount of locations opened coming for this company. I mean, there's probably going to be years in the future where they're opening 500 plus stores in just the United States. And then you got to think, like, could this company go international? Maybe. It's just right now their opportunity in the United States alone is so big, it's like you can't even think about international, okay?